Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday. It is the 30th of May. One more day of the month and the week going our way as we move into the end of another trading week. Tomorrow, pretty muted day in the market. Really no follow through to the downside, but not a whole lot of excitement to the upside here today. And hey, good afternoon, Pascal. Great to see you. And hello there, Adib. Good to see you as well. I hope everybody's having a great day, both in and out of the market. Hey, Tanner, good to see you, buddy. I hope the market has treated you all kind here today. As we get going into tomorrow, just a quick reminder, we do have our STEP webinar here next Wednesday night. You can get signed up for that over at tackletrading.com. I don't know how to put the link in while I'm talking, so I'm not going to, but if you just head right on over to tackletrading.com, I think you'll really enjoy that STEP webinar here next week. So I hope to see you guys over there. On the earnings front, kind of an interesting day going into tomorrow. Tomorrow is very light. Big Lots is about the only name kind of reporting small cap company tomorrow before the market opens. But we do have a handful of interesting S&P 500 companies: Costco, Ulta, The Gap. We've seen a lot of those retailers kind of struggle, although Dollar General had a really nice response to their earnings here today. You have a few interesting tech names too. OKTA, Okta, you've got Dell, you've got Marvel Technologies. So there are a few interesting tech names, not S&P companies, coming out. Not a particularly busy night or tomorrow morning before the open on earnings front, but definitely some interesting names as we close this week out. And good afternoon, Linda. Great to see you as always. Hope you are doing well. On the S&P front, we kind of popped a little bit on the open and really just hung around all day long. It never got the follow through. We talked about seeing that break of yesterday's low for, at least what I would consider confirmation of the breakdown. Didn't get any follow through, at least today, on that side of things, but really not a lot to say, yeah, the buyers are really excited about all these sweet deals after this sell-off. So, from what we're used to, very, very dull day in the market. As we look at the daily chart, just going to be a doji kind of sitting right on top of that 200. So on a positive note, that 200 has held for us on the S&P 500 now for 2 days, although we did breach it on the intraday yesterday. We have closed above it 2 days in a row. On a negative note, we are still below that 28. And as long as we're below that 28 from a bullish perspective, I think we've got to be pretty darn cautious. Any downward movement could, scare the market. We've seen that a few times lately, right? Good afternoon, Ed. Great to see you, my friend. Hope you are doing well. Hope you had a great day trading. Interestingly enough, for all of you Coach Mark fans out there, S&P is kind of fighting to close. We have one more day in the month on the monthly chart, still fighting at that monthly 9 EMA. So that is probably a battle that Coach Mark is keeping an eye on as we're getting to the end of this month. Really not a lot has changed in my mind from yesterday from a broad perspective. It's still going to be the break of yesterday's low, which would be the confirmation of the break to the downside from a broad perspective for me. So long as we're holding that, I'm just going to let it do its little dance. If we can push back above 28, while I wouldn't call that a very strong buy signal, maybe it would show a little bit of fight on the bullish side, if nothing else. The very least, I'd want to recapture that 9 EMA before I got too on the bullish side of things. So once again, much like yesterday, we're kind of in a stock pickers type of environment. We're moving and shaking, right? Even today, as boring as it ended up being, we did see a little bit of movement back and forth. I do think from a bullish perspective, we have to keep keep in mind that, yeah, we are skewed to the downside right now, lower highs, lower lows. It certainly feels to me, at least, that sentiment is there as well. But at least for one more day, the S&P can say it has, at least per my definition, has not broken or confirmed. It has broken, it just hasn't confirmed. And good afternoon or to you, Amy, and good morning to you, Lloyd. Hi there, Adib. Good to see you as always. I hope you are doing well. Over on the Dow, not quite as strong as a picture. I mean, we did close technically in the green, much like the S&P, a little bit of back and forth, not really going anywhere. Unlike the S&P that at least got that 200 that for 2 days has held now. I don't think it's a huge deal, but I think it's certainly better than nothing. Over on the Dow, we use that old support level as our intraday resistance here today as well. Definitely a little more of a gloomy looking chart, in my opinion, than the S&P chart. And hey, Felix, good to see you, my friend. Got to be careful. Again, not a whole lot is going to change. It really is broad market, as you guys all know, but that is certainly not a great look. Much like the S&P, if we can find a way to work back above that, okay, maybe we can start to at least hope or think or suspect, maybe a good way to put it, maybe we can work back into a bit of neutrality. As long as we are below that, I think, again, we have to be very, very careful. So you've got the Dow kind of testing the old resistance or old support as new resistance. You have the S&P that hasn't broke the intraday low off of yesterday, sitting on that 200. We're in the type of place where an uncomfortable sneeze could push the market below support levels, I think. So over in the NASDAQ, holding that 72 for at least one more day. Tech isn't particularly an area that I like, and I don't think I'm alone in saying that for the most part right now. I'm using the 72, and again, this one is a little bit behind, in my opinion, the Dow Jones and even the S&P. That can change quickly. The NASDAQ, could close below the 200 tomorrow if enough selling happens. But much like yesterday, I'm kind of leaning towards the other indexes. It's not that I really like the NASDAQ more. It's just that I see, whether it's 7,200, yesterday's low, the 200-day moving average, there are just more things, I think, to kind of prop it up. Much like the S&P chart, it's kind of sitting right on top of that 9-monthly EMA as well. So, we'll see where that one takes us going into one more day, and then we can call it a month, as crazy as that is. Actually, May went by a little slower for me than most months do. Not complaining. It was a very mellow weather out in Utah, my kind of weather. Did a little bit of traveling, so was not a bad month to be a little slower. So over on the rut, another day, another close below not only 15, but of course the breakdown point here, probably the ugliest index. Nothing really of note to prop us up, as you guys know, until we approach that 1455 range, which is a little bit of support, not a tremendous amount, but we have seen some price movement around 1450, 1455. I still expect that this is going to try to work into that range until it shows me any signs to believe otherwise. Did fight a little bit back and forth today, but not a very clean close over on the rut here today. So index wide, we didn't, in my mind at least, get enough to trigger that break of support yesterday, but didn't do enough in my mind to think that it's not very easy that it could happen, really without much trouble. Until it does, it hasn't though. So it will continue to be, a market. I think we can kind of look at both sides of the coin. But although I do think we kind of have to lean to the bearish side still. I'm not only a bear. I don't think you ever should only be anything, but I do think it's pretty natural to be skewed, one side or the other. And I think right now being a little skewed on the bearish side is, at least in my mind, the way to go. We'll get to you, energy, as you continue to sell off. But first, we'll go over into the materials. Little bit of a bounce back day, little bit of a gravestone doji type of candle at the end of the day. Doesn't inspire a ton of confidence. Again, I think we've got to reclaim this 54 before we can be too confident over in this space. There are still interesting things. We've looked at them quite a bit. We'll maybe take a peek at a few more before we wrap up here today. But an area that I do think we have to be a little bit careful on. I mean, you could, although it's very fast, you could argue this is a little bit of a bearish retracement, some downward movement tomorrow, triggering in some bearish plays, at least on the ETF. little more on the bearish side than the bullish side. And I think that's probably going to have to remain true, at least where we currently are, until we can reclaim that 54 resistance zone, old support zone. That would also get us our 9 EMA. On the other side of it, really not a ton of support until closer to 52. So certainly more downward movement could be here in the materials sector before we turn it around, especially if the market gives out. I expect that most of these things will come down and test whatever is next for them on the support side of things, except for maybe energy, because they just really don't have a bunch of support. Pretty rough day over in energy. Certainly has been the weakest area in my opinion. Today didn't do anything to persuade me that I should come off of that stance. I continue to have a bear or bust type of an outlook on the energy sector right now. Things are starting to pull away a little bit. And so they are going to, look like they've come down too much. And that might be true. They might need a little bit of a bearish retracement for nice new clean entries into swing trades. But I can't, I've said this a few times, I'll say it again. I can't understand the bullish argument from a technical point of view over in the energy sector right now. I'm never going to fault somebody, for doing what they think is right, but I just couldn't understand why you'd want to buy into this right now. On the ETF, I mean, there's just no real history. We'll come into a weekly chart here, see what we can come up with. And you look at this weekly chart, I guess you could argue that we have a teeny bit at around $59 going way back in here, kind of just south of where we are currently. Fair enough. I think maybe we could take a look at that. Beyond that, though, there's just nothing to prop it up. And so many of the companies are showing pretty good signs of weakness. So I continue to be, even by my standards, a little more on the bearish side of things. I'm not too aggressive, as you guys all know, but I'm been fairly aggressive since we broke down on the energy sector, and I kind of remain so. Although I am kind of starting to mentally prepare for a retracement, because it's starting to feel at least like they're a little bit extended, but that doesn't mean that they are by any means. Over in financials, I mean, it really is the same story over here. Overall, the sector in a lot of ways looks like the market, but there are some good looking areas, or at least some good looking stocks in different industries. It really comes down to the banks still for me in the financial sector. You've got Berkshire Hathaway, not a bank, but they're testing a pretty significant level of support right now, holding them up. You've got JP Morgan that's broke its gap on its earnings, kind of hanging by a thread at its 200-day moving average. You got Bank of America, another rough day, already broken down. Wells Fargo is kind of an interesting bearish breakdown. Canada, I think personally, where we did close below that support level here today, not looking great when you look at these banks. Citigroup, you can see what happened. It popped open and then really sold off all day long. So many of the uglier charts, USB, another one that's kind of hanging right by a thread at support, are not looking great. You have, some of the insurance companies, we've looked at them a lot, that are still holding trend. You have, CME, you have ICE that are, broke out and, held its breakout point here today. So there are still interesting areas. The banks do concern me. I don't think I don't think it's wise to avoid them. Those, top companies, the top holdings on the financial ETF, many of them are the banks, those big banks that we just kind of walked through. Got to be careful. I'm still shying away from the banks from any bullish point of view. I actually like a few of them as bearish breakdown candidates personally. In the other areas, again, I'm still open to bullish trades. Just not as open as I was in April, right? So I think everybody would probably say that. But banks, I do think we need to continue to be careful. On the ETF side of things, probably around 2620 is where we've got a support zone. We can call it 26, but probably in that general ballpark. If we see a little bit more selling on the banks, I would imagine it will put a little bit of pressure, if not on the sector overall, on this sector ETF going into next week. Over in industrials, we're just going to have to wait and see. Closing right back on the right side of 73. Now, 73 really is more a zone than a specific number, as we've kind of talked about before. Having cleanly broken down below it yesterday, but no follow through, just like the market. This continues to be a very interesting area there are nice, plays to the upside. We saw some of those, looked at some of the defense companies. NOC had a really solid move off of that little retracement today. Waste Management, Republic Services had some decent moves, but then you've got, breakdown candidates too, right? An interesting one is AIM here. Old Amtech here, kind of lower highs, hanging out at that support level. So there's still breakdown. So if this thing wants to hold this zone, I think there's interesting buying opportunities. Might need the market to at least not sell off dramatically to do that. If it wants to break to the downside, there certainly are downside plays in my mind in this space as well. Over in tech, hanging in there, it's very difficult for me to really like this chart. But again, much like the NASDAQ, there's just a lot of little things. 72 is what really stands out. And we've got the 200-day moving average, the swing low. We're below all the short-term averages. No real reason to believe too much going on here. Did have a decent day, up 0.6%. So, in today's bearish market conditions, certainly not a bad day. But I mean, some of them aren't looking terrible, but very few of them are looking great, to my eyes at least. And so it continues to be an area that's got a little more, if we kind of churn for a week or two, if we go into a little bit of a sideways movement next week, which might be a little bit of a stretch to expect that to happen, maybe we could actually see some interesting pattern development. But right now, I'm not opposed to it on either side, but I'm not really going out of my way, I guess, to find stocks to trade either bullish or bearish in the technology sector. I think we, at the very least, again, pretty much everything, if we want to start making some really, some strong bullish arguments sector wide, we need to recapture at the very least that 9 exponential moving average. We will have, overhead in the form of other moving averages and $76 approximately here on the ETF, but that is going to have to be the first step. 72 should be an interesting fight. I believe that on the NASDAQ and the tech ETF, that is an important number. That starts to give out, should be some interesting opportunities for us. A little bit of a slowdown day over in the the staple sector, holding that old support zone. Would like to see us kind of push to at least to the right end of that 50-day moving average. You can kind of see how it acted as the intraday resistance for us on this ETF. Again, things don't look bad in my mind collectively in this sector, just not quite as strong as they have been looking as of late. But if we can recapture this support, could be some opportunities. If this support does give out, much like the market, there could be some short-term selling. Technically, it would make sense before maybe some of the defensive money starts to look into these more defensive type of sectors. So not a lot has changed here. We did see some upward movement off of that hammer candlestick yesterday. So I don't hate where it's at. If I had to be bullish on one of these ETFs, this would definitely be on the top of the list of things. If I can get above that 50, I could see maybe wanting to buy into it. I think technically, at least, it looks a little bit better, although certainly, admittedly, not as good as it has been as of late. Our utilities slowed down a little bit, not enough to really kind of think tomorrow is the day I should be jumping back into utilities, but we did slow down a little bit here today. Not the turnaround candle you kind of hope for. Some of the individual companies, we'll take a peek at a couple of them. I threw a watch list together for us here today. Some of them look a little bit better, but most of them look just like this. At least the upward trending ones. So not quite enough. Probably at this point need to kind of have one more day, or at the very least take out this daily high, which coincides very nicely with that 20-day moving average. So hopefully one more small body candle here tomorrow, followed by some upward movement next week. I am interested personally in the retracement in the utility sector. I just don't think anything could happen tomorrow, we know that, but I don't think based off of today's candle it has to be as tomorrow. Looking even at the hourly chart, you can kind of see still showing quite a bit of weakness, little bit of slowdown here today, but in my mind at least not enough to want to get too crazy with for tomorrow. You see some decent movement over in healthcare here today, coming off of that support level. It's almost, in some weird ways, you can almost argue that we're trying to go back into a little sidewaysness here in the healthcare sector. again, we've looked at lots of these things, and it continues to kind of be a mixed bag. Some of some of the companies have started to show reversal characteristics. Some of them are a bad day away from a breakdown, like old CVS, but they've been a bad day from a breakdown for a while, right? So, we're kind of in the middle right now. Still think we can look at both sides of the aisle here, both bullish and bearish in healthcare. Don't expect the sector to drag me along with it as a general rule. Support wise, I think 87, this 87 zone, we can say, yeah, if this support is probably pretty important for the ETF right now. If this gives out, really not a lot of great reasons to think we're not at least working back down into these more recent lows here in that $86 range. Still below all of the moving averages on that weekly chart. Looking at the daily chart, we're kind of still stuck, or I'm sorry, the weekly chart, we're still kind of stuck in this trading range that it tried maybe briefly to get out, but for better or worse, did not win. Over in the discretionary sector, holding that 112, I think that's an important place, as you guys all know, for this ETF. Little bit of upward movement, still not enough. Again, most things are below the 9. Generally speaking, I like to be trading with that 9 EMA and not against that 9 EMA. So we still have some work to do, but I do think, much like most of the other areas in the market, we can start to say that, yeah, a little bit of upward movement off of this, a break of yesterday's low, probably a continuation, probably means the market has broke down as well. On the support, on the resistance side of things, probably at this point, got to deal with all the moving averages. Probably are going to, I'm just going to slide this guy down a little bit to this old swing low that's kind of lining up with that 9 EMA right now. Whoops, there we go, at around 114. Kind of a little bit of a short-term resistance zone, old support, along with that 9 EMA. Not a great look, but holding up here today. Kind of the moral of today's story. Holding support over in the real estate sector as well, after a pretty steep pullback. So much like utilities had a really steep pullback to start the week. Unlike utilities, actually saw money come in and kind of stay in here today in the real estate sector. Little more upward movement, could be a little bit of confirmation on it. If we look at these guys on an intraday versus, say, the utility sector, we can kind of say, well, hey, we've kind of come back to that bottom. We've created that higher low. It's this old pattern again. It hasn't happened yet, but if we can take this out, then we're going to kind of recapture some upward momentum, at least short term, on that intraday. So I think looking at today's highs, probably what we're looking at as we're kind of looking for a confirmation in the REITs as a general rule. I do think it's a decent little win, at least for today, that we held this support zone. I would rather it not pull back. I think if we break this, we have to kind of walk back into a little bit more neutrality in this space. So where we've kind of found ourselves the last couple of days on our lows, I think is an important place for the real estate sector. Yeah, that breaks. I think you have to go back into this neutrality and say this was a failed breakout, at least in this on this first attempt here. And over in communication services, still hanging at that support level. Not a lot here has changed. You are seeing Google, Facebook still in its old trading range. Google is just hanging by a thread at that support zone. And, I don't know how great of a trading environment this would be from a swing trading perspective. There's lots of little things. We've got swing lows, at 11 plus the big round number at 11. We do have, some decent history, around 1060. I don't know how great of a trading environment is, but if that breaks, that probably puts a little bit of pressure on that XLC. So again, much like tech, I'll take it one by one, not really going out of my way. Still do like Facebook as a potential K-trade candidate, whether it wants to break to the upside or the downside. We're almost, I don't think we're quite there, but we're almost to the point where we can kind of start to do this. And I don't think we're quite there yet, but kind of get to that point where, if we take out this trend line here, now I'll come back to a daily chart, maybe that could prompt a little bit of buyers as well, but we're kind of in an old pinch, right? Where we've got that rising 50 propping us up, this falling 9 kind of acting as a little bit of a resistance catalyst. Probably the easiest and probably in my mind, easiest usually means best signal would be a break of support or a break of resistance. Just going to take some time for that to happen. At least it should take some time for that to happen. So, not a lot has changed here. I imagine your market bias didn't change dramatically. I do think we have to give the bulls a tiny bit of credit. It could have been easy to carry on that selling yesterday and start, triggering things from a broader perspective. And they did show a little resiliency, but I don't think they showed nearly enough for us to say, yeah, they're back in control as we look to close this week out. On the VIX side of things, little bit of a boring day in the market, at least relatively, a little bit down on the VIX here today. But of course, nothing has really changed. We know the market that we're in right now. It is certainly a volatile market, at least relative to what it has been throughout much of this year. It is still very, very sensitive to news at this point in time. So I think we have to continue to proceed with caution on pretty much everything that we're working with from a swing perspective. Well, just from a trading perspective in general, with the well, we know what the market is now, right? It took a minute maybe for us to get comfortable, but now it's just kind of the new normal. Now it's weird when it's a boring day, right? So over in the dollar, nice little close here today. Not a great candle as we continue to fight with those resistance levels. Still like the dollar, still pretty satisfied with where it is. I want to take a peek at this one on the monthly since it's the end of the month. I'll just move this guy here. Yeah, that's right. I'll move a candle or a line live and in person. That always works, right? So over on the monthly time frame, again, we have one more day. I would suspect that we are going to hold that, but you never know. That's a pretty solid close if this is tomorrow at this time, giving us a little bit of faith in the close of the breakout. We've kind of been, I've been kind of watching the bodies of these weekly candles. As of right now, we would be able to close above them. So still think that the overall outlook on the dollar remains bullish. Just how are you looking to trade it, whether swing trading, waiting for the break, playing intraday pullbacks, whatever it might be? Still feel like we're at the dollar. We'll feel a lot better when we've, finally cleanly broken out of this stuff. Right, it's the dollar, so we've got a lot more tails than maybe some of our stocks will have. But I'll feel a lot better and a lot more bullish when we're able to kind of clear above that stuff. But I do feel like that's the way that this is going. Certainly on the support level, as long as we're holding our swing low, I think you have to be looking at it from that perspective. I would argue that the 50 right below it should be something. We've responded very nicely off of the 50 on our last two retracements as well. Not that I necessarily expect it to test that, but I think as long as we hold that, I will maintain at least a bullish bias on the dollar. On the metal side of things, we actually saw a little bit of movement here on gold, finally taking out those highs at around 1288, closing above that 50-period moving average. I think we can call this a little bit of a bullish signal here today, personally, enough to want to jump in. I don't know about that. I guess probably depends on how bad you want to get into some gold. I want to see this try to hold for us, and I think the best development could be a little bit of a high base and then a break, say Tuesday or Wednesday of next week. We don't really have a lot of resistance until we approach that 13, which we do have some history there. I think we have to respect. We have lots going on. Again, I had a little free time today, so I was just kind of doing some monthly end of the month checklist stuff. And you look at the gold on a monthly chart, and probably hard to see if I don't get rid of all those lines. It looks like a bullish retracement, right? Still holding those averages. So I'm interested. We've talked a little bit about this week, and I don't know that tomorrow's the day I'm going to be there. I think I'll wait for something else. But this is a decent little bullish signal as long as we're able to hold it. We had that same signal not all that long ago, and we're not able to hold it whatsoever. I'm not going to get too excited today, but I call this a bullish step for gold. And for the first time in a while, this week I've been, you know what? I'm interested. Lately, I've just been kind of going through the motions because sooner or later it will be there. But you have to like the movement that we saw, taking out the 50-day moving average, taking out resistance. It's really causes some problems in the shorter term. We don't have a lot of overhead until we get to that 13. That's not a lot of room, of course, but a little bit of a show of strength. Now let's see if we can actually hold it. That is going to be the next step. We've seen a few times where it's tried and failed. Had a little bit of a bounce back day over in silver too, but I don't think you can make the same argument technically that you can make on the gold side of things. From a resistance point of view, the very least, you got to deal with this swing high, right? Which is going to line up with that 20 SMA most likely in another day or two. Even beyond that, though, I mean, we've got so much stuff. 1475, the moving averages. For me to really honestly be bullish again, I don't know what it takes, but it's not going to be a break of this swing high. That would take me off the bearish side a little bit, but I continue to not really think it's a great trading environment, but I do still believe it is an easier bearish environment to trade right now than gold is. Gold actually showing a little bit here today. Silver, nice little bounce back day, but certainly not enough to get me to change my overall opinion on silver at this point in time. On the support level, again, we've kind of seen this as floor gives out. It was only a one-day floor, but if that gives out, could be something there. A little bit maybe of slowing momentum here. We'll have to see, but certainly it's got some work to do, at least a little bit, before I at least will start talking about it from a bullish point of view. Over natural gas, it keeps it interesting. There is no doubt about that. I'm glad I'm just a spectator on natural gas because we've seen some pretty big moves on the intraday. Not really done much yesterday. A nice solid green candle closing, running into those moving averages, the 9 weekly and the 50 daily. Here today, giving it all back. Looking like we got one more day, so we'll see where this one goes. But again, it looks like we're going to fail yet again. That's going to look even more so like a bearish retracement. And all that really means to me is if this floor gives out, and I define that by the actual lows that we put in, as most of you guys probably know, it's our actual lows here. That's where I have the breakdown on natural gas. If we can, that's looking pretty grim. If we got another day, right? It could be a green day tomorrow and we could be having a different conversation. But today, not looking great for a weekly close. That would just lead me to like the potential breakdown even more if that's the way that it goes. So not a lot of new things to talk about here on natural gas. The battle just carries on. It's been a fun battle in my opinion, but it's been fun to watch. And then of course we've got our old friends in crude giving out today pretty heavily. Right? We've kind of been dancing on that little 57, 60, 57, 70 floor these last few days. That gave out here today, and things got really bearish really fast. Pretty ugly candlestick. Just a little more confirmation. And this is what you always have to worry about when these technical patterns form. When you have that lower high and you have pullback traders coming in, it creates that lower high, and then it comes back down and doesn't hold support and gives away. It's just not a great look. It continues to be a pretty darn bearish place to be right now. With today's price action, I mean, if you're already bearish, you're loving it. If you're not bearish, I don't really know exactly what we need. At least I need to see to want to trade into it. I think, it's not crazy to say you're bearish on crude right now, but we do have some support not too far away from us. We also have some decent history around $54. Quite honestly, I expect it to kind of do the step where it kind of works its way towards this support level, rallies up, whether it's a good textbook trade. Who knows? If we had a little more of a textbook trade, maybe we could have taken part of this, at least maybe I could have. But right now I expect to kind of step into this 56 range and then have that battle. That gives out. I expect it to step into the 54 range, and that's kind of how I'm treating crude right now, is kind of stepping down one step at a time. But really, again, much like energy, very hard in my mind to make much of a bullish case right now over on crude oil. Pretty rough day, no doubt about it. Like I said, I was hanging out, got up early today, and so I had some extra time this afternoon, which is kind of got a little bit of a head start on some things for the scattering reports here next week. Thought we'd take just a quick peek here to look at a few of them. We looked at some of those financial stocks here, but we'll take a quick peek here just to illustrate, the type of market that we're in. There are a lot of bearish opportunities, a lot of things that you guys all know have broken down, but there are still plenty of things that haven't. I think we probably looked at PPG before. It hasn't broken down, but it's hanging on at a pretty, significant support zone. You had Chevron here over in the energy sector that actually is testing its last level of support. Most of the energy stocks, at least the ones I look at, have already given out these pivot support levels. We're kind of hanging by a thread over there on Chevron. We looked at Goldman Sachs, yesterday, but that's, a bearish breakdown. On the other side of it, you've got ICE, who had a nice clean breakout today, closing above resistance. Hard not to look at that chart and say, yeah, that's pretty darn bullish. On the other side of it, though, you got Morgan Stanley with looks like it rallied a little bit. It looked like it was going to put in a bearish engulfing candle here today. Not a great trade setup, I don't think, but it had a bearish engulfing candle feel to it when I was looking at it. We looked at T. Rowe yesterday, very similar situation, put in that lower high, but is holding that support level as we speak. On the REIT side of things, some interesting pullbacks. You got Public Storage kind of catching its 9 EMA. You had Well doing something very, very similar. So in that little pullback over in the real estate, healthcare just continues to, have things on both sides. You have Anthem knocking on the door of some resistance. You have CVS knocking on the door of support for a breakdown. I've been watching, I don't know about you guys, but I've been watching these guys for a breakdown since back in, in April. So hasn't happened yet. You have Merck and the UNH is kind of looking like little pullbacks after reclaiming some upward trending characteristics. You have that on Merck. You have that over on UNH here as well. So showing a little bit of upward characteristics. We looked at AIM for a potential, again, breakdown. If the industrial sector breaks down, I want some breakdown candidates. Doesn't have to be AIM, may not be AIM, but I definitely want some. But then we've got our friends NOC. I know these are one of Scott's looking really good. Nice upward movement here today, holding its own, closing closer to the highs than the low. The waste management companies, not quite as strong of a close on Republic Services, and well, they're not in here, waste management as well. Oh, actually, it did end up having a bear close. They kind of flipped gears in the last hour of trading, it looks like. Both of them looking pretty nicely. Pepsi had a nice little upward movement here today as well. So there are things out there, guys, plenty of things that haven't triggered in yet. I know sometimes, when the market's moved a lot, it feels like, yeah, you've missed everything, right? So, but there are plenty of things out there. Amazon still hanging on at that support level. Charles Robinson hanging on kind of at a longer term support level breakdown. Had Dollar General come out with an earnings beat, breaking and hitting an all-time high, breaking some resistance. I don't know what you do with something like this tomorrow, but there probably is something to do in the future. eBay very sideways, kind of hanging on at support right now. Could make an argument either way. Looks like McDonald's taking another run at that 200 resistance level. Paycheck's another one kind of sitting right at that kind of, not a very deep pullback, but kind of been a worm burner trend where it just kind of glides to the upside, right? Not really done a ton of huge swings, but holding its own. The other side of it, more breakdown candidates in things like RHI. Starbucks catching its footing at that 50 period moving average. Still got to deal with that 9 EMA, but some nice upward movement off of that. Tech a little on the different side of things, kind of got this little symmetrical triangle. I've been keeping an eye on Adobe personally, but you have, breakdown candidates there. ANET, big gap down on earnings, building a little floor, holding up with the tech sector overall. Yeah, that's an interesting chart to my eyes, at least. Flip it around the other way. Still, even in, this market, FIS holding its own, a little bit of a bullish retracement opportunity. And of course, you have TRIP kind of hanging at a long-term support level as well. And then these are just a few different utility pullback companies. I think we looked at AEP yesterday. AES, another one of them, SRE, WEC. So much like the sector overall, kind of have this pullback slowed down a little bit today. I don't think there's confirmation today, but there are pullbacks in the utility space as well. So, that was just a quick run through that I did. I only spent about, an hour. I shamefully was watching an episode of The Green Arrow that just came to Netflix and scanning through the markets, see what kind of head start I could get on tomorrow, see if I could find anything interesting for us here tonight. So, probably we'll have a few more to share with you here tomorrow. I imagine some of these might even be making my list for the scattering report meeting here tomorrow. So, ladies and gentlemen, that is going to do it for the market recap for today. But of course, and as always, thank you so much for your time. It's always appreciated. I always enjoy going through this process with you guys. I hope you find it helpful. If you are new around here, do be sure to subscribe to the channel and of course, hit that notification bell. Join us over on Twitter as well at Tackle Trading, and me, of course, at Frank Martin 23 as well. Like I said, we've got that step system webinar. Get in there. Certainly invite you to come join us. It should be a heck of a lot of fun. Should be some really good stuff. I'm excited about it. I get to see what I get to see, right? So I'm excited to see what it's all about. And if you haven't had a chance to get over to the Instagram, the Tackle Instagram, I definitely do so. Coach T took a close look at Match, and you had Coach Noah taking a look at CMG here as well. So some really interesting stuff going on over there on the Tackle Instagram page as well. So I could see if I can spit that one out. So you're all very welcome. Thank you. Thank you for joining, Micah, Adi, Patricia. Always great to see you, Linda. Thank you guys so much for your time. Enjoy the Coaches Show here tonight for our pro members. And if you're not Coaches Show, Cash Flow Club. I told you this, the 4-day week was going to mess with my head. I think I'd done all right until that point. So we got the Cash Flow Club tonight for our pro members. So, have a good time over there. If you're not a pro member, you know the drill. You're always invited to get over to tackletrading.com. We can get you hooked up with the free 15-day trial so you can come see what it's all about. So you're very welcome, Tanner. All right, ladies and gentlemen, well, thank you so much as always. Enjoy the Cash Flow Club tonight. Be ready for whatever the market's going to throw at us here tomorrow, and we'll see you same time, same place here tomorrow afternoon. Thanks again, everybody. Have a great evening. Bye now.